Welcome back. And in this section, we're going to look at the accounting equation. And we're going to look at how that can change what the documents really look like. Okay, those of you that might have a Century 21 accounting textbook as a reference, you're going to notice that this slideshow was meant to accompany that text. Not that you need it. So we've been looking at, when we looked at the balance sheet, we have really focused on left equaling right. And the accounting equation is really going to focus on that concept. So we saw how assets on the left were equal to liabilities and owner's equity on the right. And that's because we calculated our capital or owner's equity by taking assets minus the liabilities. And so we're going to keep that concept as we go through and look at owners or the accounting equation and how when we do transactions, it changes the equation. So we're going to look at those business activities, or the term that you're going to hear me use a lot is transactions. So the definition of transaction, a business transaction, is any business activities that change your accounting equation. So let's look at what I mean by that. So receiving cash, probably your most common transaction. And your initial one is going to be where, as an owner, you're going to make an investment in your business. So they give us a date here, August 1st, and the transaction reads, received cash from the owner as an investment. So if we look at, if we look at how that looks on the accounting equation, we're going to keep the assets equals liabilities plus owner's equity. So we have the left and we have the right there. And it is going to affect our cash. So our cash is going to increase by $5,000. And now here's where we get into double entry accounting. What happens on the left must also happen on the right. So when we are investing cash into the business, what is going to change on the left? Would it be our liabilities, which are things we owe, or is it our capital account, the things that are, the value or net worth of the owner? And of course, it's the net worth of the owner. So we increase 5,000 in the cash account on the left, which is an asset, and we're increasing our capital account by 5,000. So with that one transaction, do both our left and our right, are they still in balance? Yes, they are. So with every transaction, you're going to see that it's going to keep your left and keep your right in balance. So let's look at what happens when we pay cash. So our transaction reads, on August 3rd, we bought some supplies. We paid cash for supplies, $275. So here's our accounts, our asset accounts. We have cash, we have supplies, and then we have our prepaid insurance. And I'll talk about that prepaid insurance in just a moment. And then we have our liability account, and we have owner's equity or our capital account. So if we're paying cash, we know that our cash is going to decrease. So cash is going to go down by 275. So what we're paying for those supplies. But is it going to affect the amount we owe? Not if we didn't charge. Is it going to affect our capital account? No, it's actually increasing the amount of our supplies. Supplies are something that we own. So we see because it's happening on the same side of our accounting equation, we have to have an increase and a decrease. So by decreasing our cash and increasing our supplies, do our assets still balance? Are we still at 5,000 on the left-hand side for assets and 5,000 on the right-hand side for our liabilities and owner's equity? Yes, we are. So if it happens on the same side, then you're going to have an increase and a decrease. Okay, we have a second transaction here, August 4th, paid cash for insurance. Now, you'll notice that our insurance is always called prepaid insurance here. And that's because if you've had to purchase insurance for a car that you might drive, you know that you have to pay your insurance in advance of using it. So you don't pay for insurance after you have used it, because honestly, who would pay the bill after? So you always have to pay for your insurance in advance. So we're going to always call it prepaid insurance. Okay, so we paid cash for our insurance. Our prepaid insurance, like supplies, is also an asset. So our cash is going to go down by $1,200, which is the cost of our prepaid insurance. And then you notice the value of our prepaid insurance is increasing. So again, we have a transaction where we have both an increase and a decrease on the left-hand side. Does our left still equal the 5,000? Yeah, if we were to take in total, our new balance is there 3,525 plus 275 plus 1,200, that equals 5,000. And we can easily see on the right-hand side, we only have the 5,000 in our capital account. So we're still in balance. Okay, let's look at transactions on accounts. So on account refers to where we might, as a business, be able to charge. And so where we don't often pay cash in advance, but we're able to charge goods that we purchase. So this transaction is August 7th. We bought supplies on account from Staples, $500. So what we're going to see here is that our supplies are increasing by $500 and our Staples account, which is a liability because we've charged it, we owe Staples money, so they become a liability. So it is increasing, and so students often get this mixed up too, is remember that they see it as a decrease because they're thinking from the perspective of the cash. But it is the amount we owe is increasing, so it's an increase. And what we do on the left-hand side, we have to do on the right-hand side as well. So our supplies have increased and our liability to Staples has also increased. So if we bring our new balances down, we can see we have a new balance. We are actually at 5,500. Does the left hand equal the right hand? Yes, it does. Okay, and then let's look at this fifth transaction. So on August 11th, we paid cash on account to Staples. So we're paying our Staples bill, our liability. So we can see that is going down. We owed them 500. We're going to pay 300 on there. And our cash, because we're paying cash, is also decreasing. So we'll bring those totals down. Does my left still equal my right? Absolutely, it does. So each time we're bringing those new balances down, we should be doing a check to make sure that our left is equaling our right. Okay, so some terms that you should have caught are transaction. So that's our business activities. Account. So those are things like our cash, our supplies, our prepaid insurance, our staples account. So those accounts that we're using to keep track of values. And then the account title is, of course, the name we have given it. And then we're keeping a running balance, right? So we know what is in that cash account at all times. And then capital is, of course, our owner's equity or net worth. So let's look at how transactions can change owner's equity in an accounting equation. So sometimes when we have a transaction, it doesn't necessarily affect our assets. So we've seen transactions where the assets were affected. So let's see some examples of transactions where we might have revenue. So here's a new term. Revenue is simply the sales, whatever your business is that's doing to make money. So our first one here is August 12th. We received cash from sales, $295. So let's see how that looks on our chart here. So we are going to receive the cash. Okay, so our cash, that's easy, is going up by $295. And because it's revenue, it doesn't affect our liabilities. It doesn't affect these other assets. It affects our capital account. So we're going to increase our capital account. So anytime you see received cash from sales, sales is revenue, and revenue increases our capital account. Okay, so that was that transaction. Let's look at transaction 7. So August the 12th, we sold services on account to Javries Electrical, $350. So here's a new on account, is sometimes we're going to let our customers charge. And so that is an asset because it's as good as cash coming in. You're not, if you're a good business owner, you're not going to let people that aren't going to repay you charge. But in order to build business, we want to create goodwill. And so we will allow reliable customers to charge and pay us at a later date. So how does that affect our accounting equation? So as you can see here, we've made a new asset account, and it's called accounts receivable. So receivable meaning we're going to receive it. And then we've listed who has charged there. So it is Javry account. And it has increased by 350. It's the same as having received the cash. They've got the 350 that they owe us. It's increasing our assets. And then the other thing that it's increasing, it's revenue. So it's just as though we sold our services for cash. Revenue will always increase our capital account. Okay, so sold services, same as sales. Okay, so both increase the value of the business, the net worth of the owner. So again, you'll want to do a check. Do your accounts receive, or sorry, your asset totals here uh, equal the left and the right, and so they show you right here they do. So we're at 5,845 on both the left hand side and the right hand side. Okay, now opposite of revenue are expenses. So expenses are those items that simply are the cost of doing business. So let's see an example of that. So transaction 8 reads, on August 12th, we had to pay cash for our rent. Now, does rent increase the value of an asset? No, it doesn't. So it decreases cash because we're paying that. It's not affecting any of these assets, and it's not affecting our liability account. We don't owe Staples anymore. What it decreases is the value of our business. It's simply the cost of doing business. So your rent expense is decreasing your capital account. So after you've entered your 300 there, you're going to bring your totals down. You're going to decrease your cash by 300, decrease your capital. Is your left side equaling your right? Yes, it does. So let's look at this next transaction, transaction number 9. So on August the 12th, we paid cash for a telephone bill. So again, it's another one of those costs of doing business. Your cash is going to decrease by $40 and your capital account is also decreasing by $40. Does your left side equal your right side when you look at your totals? Yes, it does. Okay. Now, let's look at August 10th. Received cash on account from Oakdale School, and I changed it to Jobries Electrical. Sorry. Okay, so you're going to see your cash is increasing with this transaction, and your Jeffries Electrical is decreasing. So they have paid you 200 of the 350 that they owe you, and it is recorded there. So then you bring down your totals. Again, because you're on the same side of the accounting equation, you have to have an increase and a decrease. Okay, here is another very important transaction. So August 18th, paid cash to owner for personal use, $125. So this is neither an expense nor is it a liability. So many times when business owners start their businesses, they have they don't pay themselves a salary. And so whenever there is cash available in their account, they're going to take some money out when they need it. So their cash will decrease and it's their owner's equity. They're taking money out of their business. And so the term for personal use when an owner takes money out is called a withdrawal. So that's another business term that would have been part of your definitions. Okay, so the terms that I covered in this section were revenue, so that is your sales, And then a sale on account, simply meaning that you've allowed one of your customers to charge with you. Expense, which is your cost of doing business. So a key thing to remember is that it doesn't increase your assets. It decreases the net worth of the owner. And the other thing that decreases the net worth of the owner is a withdrawal. And so that's when an owner takes money out of the business for his or her personal use. And that concludes our section on the accounting equation. So if you want to check on Moodle, there's a practice exercise for you to do, and with the answers follow it. And then there will be a summative one where you're going to take these transactions, like I've showed you here, and you will put them on a chart that is very similar to what we had here. Good luck.